Good morning. Welcome to IG Live's early morning call with me, Angeline Ong. It's a wonderful morning here in London. Very hot, I might add, and a bit sticky, but still a lovely summer's day. Coming up in today's program, European indices are set to grind higher, although there is a bit of trepidation ahead of those central bank decisions. The VIX remains near a 40-month low. Speaking of central bank decisions, will there be more surprises to come after the RBA and the Bank of Canada last week surprised on that front? And Oracle set to report later today. Cloud Cerner is set to bolster earnings. Those two units keenly watched by investors. First, before we get to all that for you, let's have a look at the VIX. This is the volatility index after a second week of solid declines. The volatility index still relatively stable, as you can see here, and grinding lower. It does seem to be hitting a resistance point at around 1662, but it is early days yet. If it does bounce higher, we could see it moving towards the 1834 mark. The VIX, commonly known as the fear gauge, sank to the lowest level on Friday since February 2020 before gaining some ground there. Now, with 30 minutes to go until the European market open, let's check on how European indices are looking for you. This is the German 40, otherwise known as the DAX, and it is looking pretty flat there, treading water. Not a huge move ahead of the open, up around 1/3% on the IG platform. Checking in on the FTSE as well, similar picture there. Along with the France 40. Let's have a check of that for you. It's likely to also show a similar picture. There you go. Now, a lot of this does ride on what happens with central banks this coming week, as I mentioned earlier. A lot of the rate-sensitive stocks, like the insurance sector and banks, have already started moving ahead of those decisions. Those two sectors, which are rate sensitive, weighed on the stock 600 on Friday. Let's have a look at Asia now. Well, overnight in Asia, this is the picture there. Rather mixed. The Nikkei up, Hang Seng down, and the Singapore STI up there. Asian shares also meandering ahead of those central bank meetings. As I mentioned earlier, the RBA and the Bank of Canada stunned markets by raising rates unexpectedly to fight stubbornly high inflation. And now there are concerns that other central banks like the Fed will also follow suit. Let's check in on the close on Wall Street, just to remind you of where Wall Street traded late on Friday. And we have a higher picture there. And taking a look at the pre-market as well, and what's happening there ahead of the open, we're seeing a very slight, but pretty much flat really, slightly higher flat, shall we say, moves on the futures indication there ahead of the open. Now, just crossing back to Asia, where Japan's producer price index fell more than anticipated in May, was down 0.7% compared to the previous month. Economists were expecting a 0.2% fall. On an annual basis, the index slowed for a fifth straight month, driven down by falling commodity and energy prices. Now, it's a huge week for interest rates, especially since we've seen a repositioning of interest rate hike bets. Three central banks set to adjust or not adjust their policy. The Fed rate decision is on Wednesday, of course. Markets pricing in a pause for the Fed after 10 straight meetings in which it has jacked up its key rate by a full 5 percentage points in 14 months. Economists do see this coming meeting as an opportunity to pause so that the Fed can see the degree of a slowdown it's managed with its rate action so far. Markets beginning to price in a further potential 25 basis point hike at the end of July. Then the action doesn't stop there. On Thursday, the European Central Bank is expected to raise its key interest rate by 25 basis points, and again in July before pausing for the rest of the year. Now, this is according to a poll conducted by Reuters, which indicated that economists believe inflation across the single currency economies remains sticky. Now, after 375 basis points of hikes over the past year, economic activity across the region has slowed, sending the Eurozone into a technical recession. As for the Bank of Japan on Friday, it is forecast to maintain its ultra-loose policy. But it could also signal that inflation is overshooting its forecast. The so-called core CPI, excluding food and energy reading favored by the BOJ, jumped to 4.1% year-on-year in April. Now, this is a level not seen since the early 80s and would be an appetizer ahead of the bank's economic projections due in July. In Kazuo Ueda's opinion, though, inflation overshooting the Bank of Japan's target doesn't mean a rate hike necessarily. The governor already said he needed to see durable wage growth accompany price rises before considering any move. Now, moving swiftly on, we also have the Bank of England. However, no decision this week. We have to wait until Thursday, 22nd for that. Besides the Fed and the ECB, a few UK macroeconomic indicators could shake the pound in the coming days. Let's just have a look at the pound versus the dollar for you. Now, the pound has been trading in a rather interesting space recently because we have seen sterling, this cross rather, grind gradually higher. Inflation has been sticky. It's a similar situation to Australia, really. Loads of rate hikes recently haven't been able to bring this inflation down, and especially food prices are still uncomfortably high in the United Kingdom, and the rate of growth is also really hot. We get the unemployment figures, which is forecast to rise for a third straight month to 4%. It would be the highest unemployment rate since December 2021. Then on Wednesday, UK GDP forecast to rise 0.2% in April compared to March. This would be the first rise in 3 months. And also on Wednesday, industrial production and trade balance figures could give this cross further volatility. Let's take a look at the euro versus the pound as well, because this one could potentially give investors in and out points as well if you want to trade sterling. Last week, this cross broke the December 1st, 2022 horizontal support, sending the pair to levels not seen since around August last year. Now, want to know more about how to trade sterling? Well, check out Daily FX's Nick Corley's article on the pound on our platform and also on our website. To corporate news, Oracle, an all-session stock on the IG platform, set to hand in its fourth quarter report card after the closing bell. Investors want to see how Oracle Cloud infrastructure has performed in recent months as the flexible work model is becoming more mainstream. In Q3, Oracle Cloud revenue accounted for 51% of its total revenue. And in Q4, this is expected to rise to 53%. Another focus for investors, another center of interest, is Cerner, the health information tech giant bought in 2022 for $28.3 billion, which contributed $1.5 billion of sales in the previous quarter. Now, overall, the street anticipates earnings of $1.58 per share, a 2.6% rise on the same quarter a year ago. Sales also forecast to rise 16% to $13.7 billion. Just a look at Oracle's share price here, which has been moving steadily higher pretty much since October 2022. We've seen some form of resistance at the 9,000 level, and then again at 10,315 thereabouts, but it's broken above that and is now moving towards the next resistance point, which I've plotted for you at around 11,500 and beyond. To oil now, and prices are steadily moving slightly higher, not by much though, ahead of the Fed. Let's have a look at the oil chart for you, starting off with crude here. Actually, this has now come off that March, and it's now moving slightly down now since the 4th of June. It's now trading at around 6,961. Concerns about China's fuel demand growth and rising Russian crude supply has been weighing on the market. Of course, we've had that move by the Saudis to bolster the price of oil, and also further promises by OPEC Plus to continue with their curbs, and that is giving a bit of a support for oil here, as you can see. Taking a look at Brent for you as well, because Brent is showing a similar pattern, as you can see there. It's starting to find some sort of a support level from that 7,401 line. If it breaks through that, then we might see 7,282. However, oil prices are caught in a clash between two opposing forces: bearish asset allocators who point to monetary contraction and bullish oil speculators, says Bank of America global researchers Francisco Blanche. Also, don't forget those concerns about China's fuel demand growth and, of course, Russian crude supply also continuing to weigh on oil. After a month of heavy declines, a number of oil and gas rigs in operation also remained relatively stable last week, according to Baker Hughes. The total rig count fell by 1 to 695. Now, this contrasts with the double-digit drops we saw through the whole of May, and at the end of April, there were 755 producing rigs in the US. Finally, a quick look at gold ahead of that Fed decision for you as well. Gold prices just getting that up for you now. It did edge slightly lower as the dollar firmed, but it is starting to plateau there near the 1,955 mark, finding some sort of level there. The US Consumer Price Index and producer price data could also provide some sort of volatility for gold, because a hotter CPI number could alter rate expectations for the Fed. Gold appears in no hurry, though, to break out of the 1,935 to around the 1,985 narrow band there. And that's it for now. Before I go, let me just remind you that we have charting at around 10:30 and a look ahead to Tuesday with me a little later on in the day. Do tune in for that, and of course all our bespoke articles on how to trade sterling with Nick Corley, and also the S&P with Axel Rudolph on our platform and our website. Until then, thanks for watching.